Hi again, everyone. Perfect Storm Trading here. It's Saturday morning, August 20th, 2022. I'm going to continue this look into the actives. I'm going to go over some of the active nuances today and just take a look through the chart and see how the impact or how the forces impact the price action. If you definitely want to watch the prior videos. If you haven't watched those yet, you want to go back and review the active videos in order. So now I've got the daily chart of soybeans. We're looking at the 896 to 1792 active, the natural 7 active. So we're looking at those points. And in the video yesterday, I explained how you can only construct new octaves between the re and mi tones, the mi and so tones, and the so and do tones. So inside of every octave there are 3 sub-octaves. So you can build octaves out either way. You can increase upwards in the octave, or you can do the sub-octaves and work your way down. So what I've done, I've set the diatonic ratios into the fib tool, and I've used the fib tool to mark out the tone levels of the 3 sub-octaves. So here's our octave between re and mi, here's our octave between mi and so, and here's our octave between so and do. So you can see all the subtones. Over here I've got the force levels marked. So we have 3 forces. So along with 3 octaves inside of 1 octave, we have 3 forces inside of each octave. That's the positive, negative, and neutral that Gann talked about, and you're going to get an impact inside of each octave with those forces. However, you don't know which force will be applied at which level because they can apply at any one of the 3 force points. So the main octave level forces I have marked with a capital F. So we have a force here at the do tone at 896. We have a major octave force at the fa level and a major octave force at the la level. Then inside the sub-octave, I've marked the minor forces here. This is the fa at the 33% level of the re to mi octave, and the la tone is right there. Then we have a subtone here. We have the fa here, the 33 level of the mi to so octave, and then the la tone is right above that. Let me put that in there. This is a minor la tone, so just mark that with a small l. And then we have in the upper octave between so and do, we have the fa tone here and the la tone here, which is also a minor force tone. So those are your key points to kind of watch. So those are your major and minor force locations. So I've marked everything with F except for the la tones. I've marked with a minor small l. So then as we come across the chart here, I transposed the major and minor for clarity. When we look at this part of the chart, the capitalized mi, fa, sol, la, ti, do are the major octave, and here's the do, fa, and do of these 2 minor octaves here. So let's go back and take a look through this chart and see how these tones are impacting the price action at these levels. Okay, the first thing to look at here, recall that we cannot create an octave between do and re. There's no sub-octave inside of that. So what happens here when we break from this lower octave and we start to get up into this octave here, we break through, we get a clean close above, we retest the level, and then we move up and we get a temporary resistance at the re tone, and then it breaks through and we get a clean close above. Where does it stop? It stops at the fa level of the minor octave. You always want to be paying attention to these fa, la tone levels. And a lot of times if the market will go through the La level, it will stop at the T level. Just little nuances to know. So you can see we rejected price at this Fa level in this minor octave between the Re and Mi major tones. We took out the Do level temporarily. We regained, and then it held support here and then closed above the minor Fa tone. That's a good sign right here that the bull trend is going to continue. So what happened? We went up, we broke the Fa tone, got rejected between the Fa and the or the La and the T tone of the minor octave. You'll see that that'll happen quite a bit. So that comes back down to the Fa level here. I'm going to change this to an L because it's at the La level. So you can see the two green lines are the Fa and the La of this minor octave. And you can see that that price action, you got the high, low bounced between those points. When you have the correct octave and you have these levels marked out, these are going to give you invaluable trading information because you're going to know where the market is most likely to stop and reverse or continue. So what happens here is we bounce off the Fa, we trade up, we get a close above the T, and then we close strongly above the Do. That's a big major force point there. So you can expect when you get that type of action, you're going to probably at least go to the Fa level. And that's exactly what happens. Now we have the major octave Fa marked here by this price line, and the minor Mi to So octave Fa tone right here at just about the same level. That's generally going to be a strong point there. So what happens? We bounce around there for 6 days, and then we get a rejection. We reject back to the Re tone of the minor octave here, and then we trade up and we take out the Fa level. We go right through the So tone, minor rejection at the La tone, then we break through and go up and we clear through the T and the octave. When the market's moving strongly, you can run your stops up behind these tone levels, and as each tone level is exceeded and you get a close above that, you can bring your stop up to below that or to the nearest swing low level if there is one. So what happens, we're in a strong move here and we blast right through the minor octave So and La and even the T tone, and we get a strong close above the Do. So that means we're most likely going to go into that third octave, that octave between the So and Do point of the major octave. So now we're going to should hold this level and continue with the bull run. So what happens, we go up, we close above the Re, but then it breaks down. We get one close below the T, so that tells us we could be correcting further because we got to close below the T level, but it quickly regains. So once it's regained and it's staying up above this So and Do tone now, once you get into this area here, you know that that area is probably going to strongly hold at this point now since the false break was regained, and you can look for long trades and use that Do So level as a stop point. So we get a long sideways congestion between the So and the Mi tone of the minor octave. Then we finally break that. Over here. We get above the Mi tone. And what happens? We go right through the double Fa tone, the Fa tone of the major and the minor octave. So what happens when you break right through the Fa or La level, that will often become support on the reaction. If you get a clean breakthrough, it's going to be a support area if it comes back. 95 times out of 100, that level is going to hold and give you a setup for another trade. Where does that go? From the Fa to the La level. I don't know how many times you're going to see this as you look through charts. If you take this concept and master this line of thinking. This is going to help immensely in your trading. What happens? It comes back to the fa tone. You get another chance for another trade. It goes to the so tone, breaks above that, couldn't regain the la. It falls off the table and actually breaks back into the lower octave. So now that you've gotten back to this lower octave, it's probably going to trade down in there. So what happens? This do so level right here now becomes kind of a neutral area, much like this was a neutral area here on the do back here. So we're getting the neutral force in play at this level throughout this whole period of 2021 into late 2021. Then we break down, trade back into the lower octave. Well, what happens? Where do we get support? We get support at the la level of the minor octave between mi and so. Bouncing around the so line, comes back again, same level, support, support, it breaks. We get temporary support at the so level, then it comes down to the double fa level, and that's the area that holds. So when looking to end this corrective move and get back to the bull market, it's most likely going to happen at one of those force points. In this case, the double fa level is strong support. You get a shot here, you get another shot here, and now look how you're bouncing through la to fa, la t, reverse back to so. That area becomes support now. As you get through each level, you bring your stop up below the prior level, and you can follow that right up. Key point here, you get a rejection for a day off the T, goes back to so, then it runs right up through the next octave. You get a strong close here above the so do. Now you're in this next octave. The do so area becomes support, gives you a chance to get back in. Continuing on through the chart, look what happens. You buzz right through temporary support at re, back to do. You break that, you break the mi tone. Now you break right through the fa. If it comes back to here, it's going to be support. But now that it's broken right through, you just bring your stop right up to that level. Now you take out the so level, breaks through, false break below, continues right up, breaks right through the T and gets rejected strongly. It breaks through the la, gets rejected at the T level, comes right back to so. Now you become a neutral force at the la level here. See the sideways price action develop around that la tone? So now we're doing all this trading around this la tone of this minor octave, but what are you doing here? Look at what happens. Around this tone, you trade up to here and down to here. So as you're going forward, it's going to make that same amplitude of a move as you go forward. So look at this level here. We're up, we're down to the same level. The so level of that octave, support. The so and the T, boom, 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 boom. Finally break up, get to the do, can't breach it. Another correction begins. Gaps through the so, gaps through the fa. Then the fa becomes the resistance point, and it goes right back through do to the T level below. Now, you'd be looking for that T level to hold, because we've already moved through a complete octave quickly and we went to the T below the prior octave. That's a great area where you can expect that correction to be over, and that's what happens. We regain do, and then we're bouncing here between T, and then we get resistance at the fa level again here. Now do support, we go to mi and back and forth. So once you have these octaves set up, you can use these points of force to look for these areas where you're going to either break through. When you break through, then you move your stops. When you get rejection, you can take profit or close your trade out or wait for a corrective move to get back in. So when you're looking at, you lay these out on your chart, once you get the correct octave, this is going to help immensely because you're going to know what to expect at these price levels and have, the natural cause reason to look for these things to happen, the points of reversals, consolidation, or continuation. Now, we've been looking at the 7 octave, which is what I call the natural octave. This is a natural octave of the number 7. Now, there are other type of octaves that you can create to use in the market, and those two types of octaves are: you can use octaves which are created off major highs and lows. And then you can look for the confluent points of where those numbers overlap with the natural octave numbers, and you're going to see uh, levels where you're going to get these major price levels, because now you're working with the natural number octave and the market created number octave, and where those points overlap, like this is one of them right here. You're going to get key support at those levels. The other type of octave is the one created from the periodic table, which is explained in the Gann Science book. So when you're looking at markets from those three perspectives, and we haven't even brought the time factor into this yet, you can use, I've just been doing this example with price. You can also use these octaves with time, and maybe I'll do something on that, maybe I won't. I'm going to illustrate one more concept with these octaves, and I'll do that on another video since this one's getting long now. So I'll come back, do one more videos on octaves, and I'll probably close this out.